Quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
I can hear you loud and clear, but I can't see you.
Can't see me. Hold on one second, Coach Paul. I will share that with you in a second. Welcome, everyone, to At the Buzzer, our market recap. If this is your first time here, the goal of this session is to review what happened in the markets for the day, and because it is Friday, for the week. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity. We want to see how we can take advantage of those opportunities while managing our risk. If this is our first time meeting, I'm Coach Jay. I've been a Topstep performance coach since June of 2023, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep since April of 2023. I've been involved in the futures trading industry for 4 decades. I'm here to share some experiences, some knowledge, and hopefully help you become a better trader.
Thank you for that, Coach Paul. We do have the president speaking right now, I believe, signing some executive orders. So we're going to try to see if we can bring that in before we get into the charts. Give me 1 second on this. See if we could bring this in here. Audio on that. Hold on 1 second. Go ahead, Coach Paul. Just buy me some time here. I'm just going to see if we can bring
Okay. Well, first of all, let's ask our audience, how did you do on this NFP Friday? Some pretty big moves. Let us know in the chat. I see.
So know how you did. I think we got
when
the president
Americans
speaking
try
now.
to realize
be
the
able to hear
American
him
dream
chat.
of owning a home, they're able to do so
Coach
without
Paul and
being
myself
harassed.
out of this.
Good job.
Now,
Good. It's a great honor, John.
some audio on here. But the president signing executive orders right now.
There it is. And that's going to help a lot of the homeowners of our great country. John, want to hold that?
Sure.
Thank you, John, very much.
Thank you very much.
Thank you very much. Okay, Will, you go ahead.
And I'd like to leave you with this gift from a constituent back in Tennessee.
Oh, I could use that at night.
It's an American flag.
That's very nice. I like that.
Thank you, Mr. President.
Thank you very much. That's very nice.
Next, we have a number of executive orders for your attention, sir.
Okay.
From 1789 until 1947, our nation won some of its greatest military victories under the direction of a Secretary of War operating within a Department of War. Today, with this executive order, you will authorize the current Secretary of Defense and the current Department of Defense to once again embrace this great lineage and once again be named the Secretary of War and the Department of War.
So this is something we thought long and hard about. We've been talking about it for months, Pete and I, and Dan. Dan came into the fold. By the way, a great general. He headed up the, I wouldn't call it an attack. I'd almost call that one maybe even more than an attack. What he did with Iran, you saw the success of that operation. It was perfect. In fact, this was sent to me by the great company that makes that particular B-2 bomber. And it was flawless. It was actually flawless. They flew for 37 hours back and forth, and there wasn't a bolt that was out of condition. There wasn't an engine failure. There was no problem. It was a perfect attack, and it knocked out any possible nuclear capability for Iran, which nobody wanted to see, and we weren't going to put up with. So great job, Dan. And we've been talking about this Department of War. So we won the First World War. We won the Second World War. We won everything before that and in between. And then we decided to go woke, and we changed the name to Department of Defense. So we're going Department of War. And I'd like to ask our Secretary of War to say a few words. Pete Hegseth. I think it's a much more appropriate name, especially in light of where the world is right now. We have the strongest military in the world. We have the greatest equipment in the world. We have the greatest manufacturers of equipment by far. There's nobody to even compete. And you see that with this and so many other things. The Patriots are the best. Every element of the military, we make the best by far. So, Pete, I'd like to ask you and maybe Dan Raisin-Cane to say a few words, please.
Mr. President, thank you. After winning a war for independence in 1789,
George Washington established the War Department, and Henry Knox was his first Secretary of War. And this country won every major war after that, to include World War I and World War II. Total victory, Mr. 50 years after that, we changed the name after World War II from the Department of War to the Department of Defense in 1947. And as you pointed out, Mr. President, we haven't won a major war since, and that's not to disparage our warfighters, whether it's the Korean War, or the Vietnam War, or
we're
our
going
generation
to
of Iraq and Afghanistan.
put this on mute for now. I'll keep it up in the
this
background
name
just
change is
in
not
case
just about
they are
renaming.
saying anything that we need to pay
It's
attention
about
to.
restoring.
Right now, he's
Words
signing
matter. It's restoring, as you've guided us to, Mr. President, restoring the
executive
warrior
order,
ethos.
but we're going to put this on mute for now,
Restoring
guys.
victory and
Keep an ear on it, and we'll get back to the markets. That up there for now. All right, Coach Paul, you were saying NFP Day. How did our chat do today? Were you guys up on the day, down today? Anything that you learned from the day?
Well, we see Dread Daily. Great day. 3.6K on my account today. Great job.
Great job. Get into the markets and the news. Give me 1 second here. We had some numbers out this morning. We had the non-farm payroll. Of course, that was the big number the market was waiting for the week. Came in at 22,000. Forecast was 75,000. Coach Paul, pretty big miss on that number. What do you think about that number?
Oh, well, very big miss. I don't know who's going to get fired. But also on top of that, June was revised downward. Very big miss. This is, it signs that, this economic momentum is softening, if not collapsing. I was really more disturbed by June's downgrade of the numbers. I just obviously the market absorbed it after the opening of the New York market, but overall, I mean, is recession looming? 22,000 with an expected 75,000. This is the highest rate since 2021. It's not good news. But how does that affect the markets? And we'll go through that. But overall, the economy is definitely softening. What's your look on this?
100%. I mean, some of the labor data that we've seen has not been great. We saw the ADP number earlier this week. We got this non-farm number, which they had. I thought it was interesting. Before the number, we saw that they had a hard time getting the data, which I thought was weird. This big number is coming out, but for some reason they were having technical difficulties and couldn't get to the number. So there's a lot going on. As far as the job numbers go, again, they don't look great. The market initially responded positively to it, and then we saw that sell-off, of course. I think on a higher time frame, we're still in an uptrend. Looks like the market is pricing in now maybe a 50 basis point cut. It's a 12% probability of a 50 basis point cut in September. But now we may be talking about 2 or 3 cuts this year instead of just the one, or maybe keeping rates the same. So interesting times. We will see how the Fed responds to this. We got inflation data coming out next week, and we know the Fed is looking at that inflation data to make decisions. So if inflation comes in hot and we're getting bad jobs data, we will see what that means for the Fed's decisions. We got some comments out of the president. Ukraine war will end or they'll be hell to pay. We'll turn that back on in just a minute here, but let's take a quick look at the markets. We got 35 different markets we can trade with Topstep accounts. And today, to the downside, we had Heating oil down 1.7%, RBOB gasoline futures down 2.02%, and crude oil, our biggest percentage mover to the downside at 2.32%. To the upside, we had the 30-year bonds up 1.36%, micro Bitcoin up 1.4%, and the ultra bonds up 1.73%. Seeing some upside in the treasuries, Coach Paul. We know as rates go down, prices go higher. So nice rally in the 30-year and the ultra bonds today. We talk about our big four. We already mentioned crude oil down 2.30%. We had the S&P down 0.35%, gold up 1%, making new all-time highs, and the NASDAQ. Where's the NASDAQ on this list? I never find the NASDAQ. Where are you? There it is. The NASDAQ pretty much flat, 0.3%, 0.03% to the upside in the NASDAQ. At one point, the NASDAQ was up about a full percentage point before we saw that sell-off. Let's take a look at S&P chart, Coach Ball, because we did make a new high in the S&P on a daily. Actually, let's look at the weekly since we're ending the week. It was a short week this week, but what are we seeing on this weekly, Coach Ball?
Well, that weekly it looks a little different. Stalling weekly. A lot of wicking action. While we are making all-time highs, we're not holding them well. And with this weekly, it looks like we're flattening. Yeah, that's a little different than I would have expected to see, seeing this week's action. We finish in the middle of the range, basically, for the week. I don't think it shows just how dramatic today was, but that is a weekly chart. But thin and wicky for the last month, or the last 4 weeks. So really, this really, on a weekly basis, this really needs to start picking up some speed, or I think we could turn around. What do you see?
Yeah, pretty indecisive. The last 3 weeks of price action, really, we got a lot of wicks on both sides. The last time we kind of saw that, December, we had a little bit of a sell-off, and then we had those. Well, it was on the daily more so. We saw that indecision in February. I'm just reminded of the last Fed rate cut that we had in December. Here's December, and it took a little while before the market sold off, but here is December on the weekly. Didn't see a favorable reaction in equities markets right away. And again, we got a Fed rate cut coming up in 12, or shouldn't say rate cut, Fed rate decision. The market is pricing in a cut. We got a Fed rate decision in about 2 weeks. So interesting. All-time highs. It's hard to say that, I'm bearish this market, especially when it's making all-time highs. 65, 41, 75, new all-time high in the S&P. Of course, the NASDAQ is lagging a little bit. Take a look at that chart. But on days like today, we get a pretty strong sell-off. We held that 20-day moving average, Coach Paul, at the low, 64.65. Take a look at the half-an-hour chart. Last night, of course, anyone surprised that we didn't really get much movement last night? It was a decent trade, but really, I think the day started with that with the NFP candle, Coach Paul.
Yeah, let's frame that out.
Let's go down to a 3-minute chart here. Frame out the high and low of that CPI candle. Why do I keep saying CPI? That's next week. NFP candle, NFP.
Well, there's always something to worry about. But before we go, one of the things that's interesting that I haven't heard since I started in this business is the word stagflation.
Yeah. Which
means slow growth and inflation. That is the worst of all worlds. So when you mentioned the CPI, we're going to PPI, you're going to cut rates, and inflation is running up. I mean, where do you turn? So I think you're going to hear this word more and more, stagflation. It's the worst of all worlds. But we're day traders. Let's review today's action.
Looking at today's action, so we have that NFP print. We talked about this yesterday. Maybe not trying to guess where this market was going to go. We'll talk about the trade that the house account took in gold when we get to that chart. But 25-point candle here in the S&P high to low. How do you manage your risk in that? Maybe you stay out of that trade. But bounce off this 6,500 level, 6,500 area, bounced up. We had volume look like it wanted to leave that range. Maybe it was a decent trade. You can buy it somewhere near this 50% area here for a decent trade. I know for me, best trade I took today was a long in the Russell with the similar game plan here. But once that volume came in, Coach Paul, for the New York session, uh, the upside was really over. If we look at VWAP from the New York session open, it was
It was a
pretty
rug
flat.
pull, as Courtney said.
Yes, it was.
Well put. That stalling action at all-time highs. And by the way, look at that. The first 3 minutes was big volume. I mean, it was good buying volume into all-time highs, and it just stopped on a dime.
At a major level, right? 64, 65, 40, all-time highs right there. And that's the way we've seen this market make all-time highs, Coach Paul. It makes an all-time high and then it sells off 80 points. I think I have to go back and count, but it's maybe the third or fourth time we see it do exactly this. A really strong rejection there.
Well, not speaking technically, but those are pretty nasty numbers. So, but seems to me there's profit taking. I mean, someone liquidated some equity positions and didn't care about the price. We'll look at the volume, the highest volume, and we had that streak of nothing but selling. Now, we had that melt up yesterday, that grind higher. So we went back and filled. This is really what we did. There was no new buyers. So I think the market was all along. We kind of
What it looked like.
And then it was stacked on stacked selling, like the week longs, the longer term longs, the liquidation, and I get kind of triggered when I see this. Mine being a pit where you just would you stop the selling? Because if you're taking the other side as a market, you're just like there's nowhere to run. And that I see regular trading hours only. That tells the tale. We went that gap.
It didn't hold. Once we saw that gap fill, the volume actually picked up on the gap fill. So I changed the charts over to just regular trading hours. Maybe we could see it a little bit more clearly. Of course, this gap here was that NFP candle for the most part. But once we closed the gap, all the weaker buyers, we saw this market rally, Coach Paul, yesterday on pretty low volume. Where we were talking yesterday, some of the traders were talking yesterday about it's hard to get in a move like this because we're getting so far away from VWAP. Think about what that actually means, right? We're getting so far away from where most of the heavy volume was buying. So who was buying this? It's all the day traders, the late longs, and if they're not holding on to those positions or when price stops going up, these are going to be the first people to sell. When that happens, that kind of just cascades, and we sell off pretty strong there. So really nice move in the S&P, in all the equities, really. Go ahead, Coach Paul.
You mentioned that yesterday was like a feather caught in the wind, right? Today, we look at that volume. That was a pretty big volume. It was consistent. Today's volume, which was higher than average. So now we get the selling volume higher than average, not buying volume. I'd like to see, maybe going to ask Hogue Monday about the open interest if it's declining, because if that's liquidation, we could lose some longs here. Now look at that half hour. That tells you that with that 1/2 an hour, and it never recovered really. It was short covering some value buying off the 200 moving average. Interesting, we stopped there. Really couldn't settle there too long. But the veracity of that is concerning off of all-time highs. Nothing much else to say there.
We go. We did stop at that 200 moving average on the 30-minute chart. Let's take a look at the NASDAQ really quick. The NASDAQ, again, has a little bit more work to do to catch up to those all-time highs. NASDAQ stopped right at 23,900. There was about, on the way up there was about a 500 lot that sat up there on the offer. We filled that, and that was it for the day. Closing above that 200, that 20 moving average. Go ahead, Coach Paul.
Just Coach Vince was letting us know Wednesday and Thursday, S&P gaining 25,000 in open interest. So it makes it Monday's going to be interesting. Let's see what that is.
It will be
Thanks, Coach Vince.
thank you, Coach Vince. Same thing here. We have that NFP candle in NASDAQ. Presented a decent long opportunity. I saw some traders getting short up here as well, back into the candle, taking some profits. But we pushed up into that 23,900 level. Again, there was about a 800 lot that was sitting out there on the offer. It filled it, and it did that right on the New York session open. The NASDAQ was a much clearer sell, in my opinion, where we saw the S&P chop around a little bit more, a lot more overlap. That rejection up there at that major level in the NASDAQ 23,900, that told a story. If you guys were watching the reversal challenge, I was reading what was happening on the DOM, and a similar thing happened here at 23,690. Of course, not as dramatic, but watching where, if you're a volume trader, if you look at the DOM, if you look at Bookmap or anything like that, watching how the market responds to some of these bigger orders can tell you a lot. In this case, of course, we don't have as much volume as we did during the open, but that 690 area, you may have heard me call it out during the reversal challenge. We filled it, and then what do? We sell off. We did come back up to that price, but in this case, where we had so much volume during the New York session in the morning, we filled that order and did not look bad, Coach Paul. Volume continuing to build to the downside. This is flow that you don't want to fight, right? If you were looking for, J trade reversals, like this could have been one right here. Why wasn't this a J trade? It was the highest volume outside of that open, but sometimes high volume means continuation, Coach Paul. And in this case, high volume definitely meant continuation.
Yeah. Like this was, that's why I consider this liquidation. It was just here. I got more. Now, think about the market makers are going to stop. They got here's more. They have to find someone else to dump it to, and it feeds on itself. And that is pure. I mean, if you're in that situation, it can be terrifying. It's like you're boxing and you can't lift your arms up. Like the punch is going to keep coming. But I think today is really an important day, seeing that kind of movement. With, like I said, this is very negative news. initially you reacted as positive, right? Oh, good news, bad news is good news. You're going to get rate cuts. But I think some larger players went, maybe I should just lighten up. That appears that way. But continuation on that and we talk about not just because we have a volume spike, does it mean it's going to be a J trade? They asked first of all, asked the trade or close above that candle. It didn't do that.
So we really made the low down near 23,500, which could be a sign as well, right? If we have all this aggressive selling, watching the market's reaction to some of these whole number levels, what do we do at 800? We sold through it. Sometimes people like to look at whole numbers like, oh yeah, that's where it should bounce. And I think this is a perfect example of support and resistance is only support and resistance if the market agrees that it's support and resistance, right? 23,800 we sold through, 23,700 we sold through without an issue. 600s we sold through, a little bit of a bounce there, but then we get down to 23,500, major psychological level. Everyone who's watching the NASDAQ is saying, hey, we're getting down to 23,500s. And then that selling, we finally find the last seller, Coach Paul. Decent volume here.
Yes.
But even then, am I just trying to jump in front of this and buy it? Probably not. I did buy somewhere up here, took my losses and said, okay, I can't buy this anymore. But
And even
waiting,
that wasn't a complete exhaustion because the volume was so high. It's just like you described it, the last selling, but it wasn't a complete exhaustion.
right. We do see that volume die off right after that, right? We get under the average, and then maybe everyone who's short, they can start taking some profits. But we can see we came back to an area now going into next week. This zone right here, 690s, 660 up to 720. I'm going to keep this on my charts for the NASDAQ. We can see where we rejected right at 50% of it. On this pushback up, the market came back to this volume. I'm going to keep this on my charts for next week. I'm curious what volume profile looks like here. And then we can get over to gold.
Well,
So, volume profile on
came
here.
to yesterday's volume control area.
So volume point of control today at 643. Yesterday, if we put a profile on yesterday's price action, we got it at, here we go. Came down to volume point of control, 527.
Yeah.
Interesting stuff there. Interesting stuff there. All right. Anything else you got on the equities?
That's it.
Right.
But you know what? Before we go, let's look at the weekly on the NASDAQ. Did we look at it?
Not yet. Let's take a look. Here we are on the weekly.
Stalling. We're in a range. Let's keep the boy. It's falling behind. We're going sideways. Is it topped? I don't know. I don't know the top until it's in, but it's definitely stalling. Needs to pick up the momentum to the upside, or we could have a little bit of correction looking at it on the weekly.
Absolutely. All right. Let's move over to gold, another market that made all-time highs, 36.55.50 last all-time high in the gold futures contract. We talked about this. Gold was in this consolidation for 130 days. And we started to break out. This breakout is not going to be a move that you want to fade. We talked about this a couple of weeks ago, or maybe early last week. Once we broke out above this consolidation, we had all these equal highs here. Once we broke out of that, this has been a somewhat runaway market. Coach Vince was on talking about 3,700s early this morning. It looked like we had the chance to go, Vince. But 4,000 is not far either. Coach Paul, I know you've been talking about that. We're less than 10% off of 4,000 in gold. And man, what a trade it was today. Let's go down to anything you got on the weekly or daily, Coach Paul?
No, but just the
Higher.
same thing you just repeating what you said.
Going up. All right, we took a 5-minute opening range trade in gold today based on the chat's vote. Gold opens up at 7:20 Central Time. Took a 5-minute, triggered along, and we held it through the news. Coach Vince had a level, 36.31. And if we look at how we got there pretty quick. I'm gonna go down to a 1-minute chart here. Put that back. In that 1 minute, Coach Vince, we got to your target. Coach Paul, I want to ask you a little bit about this. Some traders in the chat were saying, hey, you guys are gambling taking this trade. It was a 5 micro long. Max, the risk on the position where the stop was about $270. What is your opinion on holding that trade into the number?
You had a stop in.
Yes.
You accepted that risk.
Maybe with a little bit of slippage in mind, but yes.
And you can afford it in the account.
Correct.
So you predefined the risk, put it in, and decided you would hold it into the number. Now the size of that account is a heck of a lot bigger than a $50,000 combine at 2,000.
Correct.
So yeah, I don't. Now another thing, the gold is going to be I would think it isn't as affected by this number. It wasn't like an inflation number; it's an unemployment number. Now, was it affected? I don't know. Did they buy gold because of unemployment number? But predefined risk, fully accepted. You understand, and it's a bigger account. Those are well within the definition of proper speculating. Now, if you didn't put a stop in, or you put 5 big ones on, and you couldn't afford that risk, that's gambling. To me, it looks like some big cojones. But
sometimes you got to have those.
Somebody, yeah. Was it a good trade? Yeah, it was a nice trade. The risk we're in, what I really like about it is you're going in the direction of we know this is a runaway bull market. It's just hard. If you wait, the next is like you have that big move. Now, once again, the account can take that risk. It was defined, the stop was in. Nice trade.
Great trade. Genius Genie in the chat says, took a couple punches today, got frozen, and daily loss limit saved my XFA. And that's why we have one. That's why you have one. Sometimes the market's going to hit you, and you're going to be like, oh, man, I did not expect that. Sometimes the hit is measured, and sometimes it's not. But that daily loss limit is a measure, and good job saving your XFA. That 36.31 became an interesting spot in gold to establish some risk. We can see the market's response up here. So shout out to Coach Vince. Shout out to Coach Vince. If you're not paying attention to the Topstep Daily Levels webpage, I would highly suggest it. All of our coaches are putting levels on there, and I don't put levels on there as much anymore, but yeah, it's pretty good stuff on that Topstep Daily Levels page. Coach Paul is contributing to that as well. All right, anything else you got in gold? There was a couple nice trades here from this area. I'm seeing some high volume rejection here, right? There's a failure there.
Yeah.
Tried to sell it, couldn't.
So if we take that 1 minute, was that a 1 minute trade? Did
Yeah,
it
that's a
really
1 minute.
rally? Like that was still, I was thinking it's 3. That's but now we have a new opening or it's a new session, really. So we frame that out and we start seeing, that especially, it's almost a J trade. We have that heavy selling. So think about it. Heavy selling can't take out the buying.
And
That's
it
what
wasn't going
that
to take
is.
out this buying. They had to do a lot more than that.
It was the heavy selling. I mean, it was someone tried. It was like, okay, let's see if we can turn this. Oh, it didn't go. Well, then buy them all back and then some.
Yep.
And that was quite a move right there. It's just more proof that gold is in a runaway market. I think the feeling is the overall macro vision of is gold's the only thing you can trust right now.
That's what it looks like. And if that's the case, we are going to continue to grind higher. I just want to take a quick look. Digital gold moving like the equities today. Bitcoin moved like the equities.
Yeah,
That looks like a NASDAQ chart.
it really does. They're tied hand in hand. What about the other crypto coin?
Looks like the equities.
Okay,
All the suits got into crypto and they changed it to a.
the suits got it. Well said.
Let's take a look at crude oil here. Crude oil had a pretty interesting day here in crude. What are we looking at on the daily in crude oil?
Continuation. Yesterday we closed right under or at the 200, and it stayed. It's interesting. It stayed that way until this morning when early this morning when London was closing. It was like it broke hard. A lot of that move came in about a half an hour. If we look at the half hour, this looks like continuation. We're under the 200. Yeah. Under the 200 on the half hour. Last night we went sideways. We couldn't find anybody willing to push it higher so we meandered, but I don't know what came out. Look at the volume of that. Oh, OPEC made some other announcement.
They have
So
that meeting, OPEC meeting this weekend,
Oh, is there?
September 7th. And a lot of the fundamental news that we're hearing in crude oil is bearish, right? And we're seeing prices do that as well. We know the president said he's looking for crude under $60 a barrel. This move was pretty insane, right? These are 3-minute candles. It sold off and got bought right back up and sold off again. If that is not volatility, I don't know what is.
Didn't we see that again yesterday in a half hour?
Was that crude or is that something else?
It was something else. So we're seeing this is becoming common.
Yeah.
But yeah, but then we had a dead rat bounce off the bottom.
No one likes rats, I guess.
No one. If I did insult the rat lovers, sincere apologies. But wow, look, maybe if we do see 60. But yeah, it's just not finding any buyers.
None at all. All right. Any other markets we want to talk about, Coach Paul? It is a Friday. Anything you want to talk about before we wrap it up today? Chat, any questions that you have, any markets that you want us to look over?
Let's see what happened to platinum today.
Take a look at platinum.
Talking about that.
And then let's take a look at the Treasury products as well, since we see potential big Fed rate cut coming up soon. Here is platinum.
That poor thing. Well, look, it tried. They did have a nice break off of. There was a nice attempt at a rally. And we see we're here again. We see that big volume, suck people in, just to slap it right back down. This is starting to remind me of the early '80s when I started. Wow.
A lot of volatility like this?
Yeah. Platinum is not a place to be. Don't trade it. It doesn't fit the size of our accounts. Unless you have $25,000 balance. I mean, look at the size. So that candle right there, what was that value of that candle, high to low? It's got to be like $1,000.
That's a 2% 30-minute candle, 2.5%. Yeah, so it's pretty close to that.
Yeah, that is not no bueno, no bueno. Go stay away.
We will get to
Okay,
Z.
bonds.
We'll get to ZB. Let's get to ZB. Got Cabana Paul with the hat. Nice hat, Coach Paul.
Thank you.
The
It's Friday. It's my Friday hat
Friday
from now
hat.
on.
Gotta have a Friday hat. It's Friday haircut day for me. I gotta hit my barber up. Bonds. Let's take a look at the daily. What are we seeing here? Market that's been under heavy sell pressure for ever.
Yeah. I think it's a relief rally and kind of sharp. We finished above the 200 yesterday or Wednesday. Still in a correctional phase, but the candle from April or tariff Thursday, we're the first time we're back up at that resistance underneath that candle. Can this follow through? Well, one thing that's happening here is the short term, the 20 and the 50 are closing above the 200. It's got some legs.
It's the first time that's happened in a very long time.
Yeah. So we're starting to pick up some steam. By the way, the 10-year and the 5-year have already done that. So it's looking friendly. But
If rates are getting cut, prices are going up.
let's look at today's action.
It's last night's open, but of course, the market was going to wait for NFP. Let's take a look at a 5-minute chart. This looks a lot more reasonable
Yeah.
than trying to figure out the equities. It's a nice trade there. Same process. Frame out the news candle. This is a 5-minute. Let's take a look at a 1-minute. The EKG. But there you go. Frame out that news candle. And here, I think more than anything, the treasuries are going to move fundamentally, right? The market starts pricing in a rate cut. Prices in treasury products then go up. This is a nice fundamental and technical trade here. Really nice rally. Coach Paul, you still trade the treasury products often?
Yeah, I was long the 10-year.
Okay, let's take a look at the 10.
It hit I've been long it since I think Tuesday. Where was it? It hit my profit target, and then
Nice.
and it kept on going. So, at 10 years of loose, see the difference. So the short-term rates are going down faster than the bonds, which would make sense in this environment, because you can cut rates and it will reflect on the short-term, the 2.5 and a little less than the 10, but even less than the 30, the yield curve. But let's look at the 5-year. See, they're all, see, the short term is railing faster, which is something the Fed can control. It can't control the long end of the curve. Yeah, we're starting to really pick up some steam. We'll see. It all comes down to what? What's next week?
Inflation data.
The inflation data.
CPI, PPI, and then the week after that, we got a Fed rate decision. M says, no guesstimation needed there. Blowout right after the opening candle. Yeah. Every time I look at the treasury products, I got to remember Cortland, Top employee, who said, I only ever trade on news days and I only ever trade treasury products. There's a reason why. There was no guessing after that first minute. Maybe there was a little bit of guessing, but the market was very directional after that number came out, looking at the 30-year. And very clear spot to limit risk. May not be such a bad idea. All right, we got 15 minutes left, or we can wrap it up now. Coach Paul, anything else you want to talk about, or do you want to send us into the weekend?
Let's go into the weekend. I'm going to go back onto the beach with my hat. Have a pina colada or 5. And relax this weekend. Get some rest. Review your trades. Not for a long time, but on an hour. Be real. See if you're executing a plan or you're executing fear or greed. And then enjoy the weekend. And we'll see you again one day.
Some stuff. Yogi, maybe we'll save that one for next week. Wanting you to look at some knob spreads, Coach Paul. Maybe we'll save that one for next week. And Mo, you need to listen to your inner voice more. I see that comment you said in the chat. Tells you to stop when you're up, but you don't listen to it. Do some reflecting this weekend outside. Get outside, go for a walk, talk to yourself, listen to that voice, and trust it next week. Trust it next week. Everyone, have a great weekend. I think Coach Hoop is still doing his class in Discord in about 15 minutes or so. We're actually at a half an hour or so. And have a great weekend. Do something fun this weekend. I'm going to get some rest.
There you go. Get an ice cream, says Bruno. Thanks, Bruno. I'll do that too.
Get an ice cream. Sounds like a good plan. Have a great weekend, everybody. See you next week.
All right.
Bye.
All right. Bye.